makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Beijing has urged local companies to avoid using Nvidia's H20 processors, complicating the chipmaker's attempts to get back billions in lost China revenue. Now, it also comes after the company agreed to an unusual arrangement with the Trump administration to give the U.S. government a 15% cut of the related revenue. Now, the new guidance comes just hours after President Trump signed an executive order extending the tariff truce with China for another 90 days. Now, we're joined by Ed Ludlow, a co-host of Bloomberg Technology. We're lucky to have him in London with such terrific news flow. Brendan Murray, who leads our trade coverage, he, hasn't slept since April 1st, and Mohit Kumar, chief European economist at Jefferies. Mohit, we'll talk about the markets and, of course, all of the implications for all of this. Ed, let's start off with you. I mean, it's unclear, actually, whether... So there seems to be good news about trade. We'll get to that with Brendan. Yeah. But the fact that China's now saying, well, please don't buy these processors for Nvidia. Is it retaliation against the Trump administration?
Well, chronology is important here because this is guidance. It's an advisory, which is quite normal for Chinese authorities, particularly the internet watchdog, to do. And it's happened over the last several weeks. So likely predates the news of 24 hours ago, the deal between the United States and Nvidia and AMD for that 15% revenue cut. The analyst community certainly thinks that this is a tactic from China as part of the broader negotiation between the United States and China, where, pardon the pun, but chips are a bargaining chip, right? Either China's angling for access to a much more powerful chip beyond the H20, or it's trying to do something with leverage against China. But the kind of state of play that you've got to know is that H20 is not the most powerful chip that's available to Chinese companies. The domestic chip from Huawei is much better anyway, and there's an element of that national champion and national security element as well.
Brendan, what can you tell us about the 90-day reprieve? I mean, it seems like, the markets certainly are relieved on that. Is that for domestic reasons that, they're thinking actually this will hurt U.S. inflation and so complicate, for example, the Fed cutting? Or is it that he really wants to deal with China?
Well, he definitely wants to deal with China. He wants a summit with President Xi. This one really came down, this 3-month pause, this truce really came down to the last couple of hours, and it probably didn't need to. They had resolved most of the issues in Stockholm a few weeks ago. But President Trump likes to keep the other side guessing and wondering if perhaps he'll re-escalate. But he didn't. He pushed the new deadline out to November 10th. And so that leaves, the relationship vulnerable to flare-ups of retaliation and using leverage, like Ed was discussing, to restart these higher tariffs. So I think what we're going to see is just some more uncertainty. It's going to get us through kind of the peak shipping season, which will give retailers, importers, manufacturers some sort of sense of stability, but it leaves a cloud of uncertainty hanging over the relationship between the U.S. and China.
Yeah, and Mohit, in general, we are after, of course, August 1st, which was the first deadline. I mean, it was August 1st and then August 7th, and then it got pushed back. But does it feel better in the markets and as a chief economist because you have at least the base is like 10% the new 0% of tariffs? Or do you think that anything could really change at any moment?
There is still a lot of uncertainty. But I would say if you think about the big trading partners, we have some version of a deal with the EU. No. With China, we have some certainty, okay, not a deal, but at least some backdrop is there. Similarly, with other trading partners like Japan, even with India, some version of deal is shaping up. So I would say uncertainty is reduced. But if you think from a big picture perspective, our view has been that tariffs don't really matter. So from an equity markets perspective, I do not really think tariffs matter. Yes, they create a lot of uncertainty.
Until they matter.
Well, until they matter if we don't have a deal. Yes, totally agree. But as long as we are moving towards the path, and like what Brendan was saying, Trump does want to have deals with the key trading partners. So as long as we are moving in that path, I would say tariffs actually do not matter.
Yeah. It's unclear to me, Ed, and it's really interesting having the technology perspective. Donald Trump is now open to Nvidia selling Blackwell to China. Yeah. I can't figure out whether he is okay with dealing with China if he can get money back, or whether he's less skeptical than the rest of his cabinet on China.
Yeah, the president actually showed quite interesting command of the subject matter during the press conference yesterday, the specificity of the H20 relative to the other chips that Nvidia offers. But there's two competing things, right? America's focus with AI hasn't been the model makers. It has not been OpenAI or Anthropic or the software side. it's build, baby, build. And so from that standpoint, exporting the American technology stack, it's a codified policy. It was in the great AI document when I was in DC 2 weeks ago. But this is unprecedented, the idea of an export tax, an ad hoc agreement between a company, its CEO, and the President of the United States. And when I was phoning sources last night, they basically corroborated it's as the President explained. Jensen Huang went to him and said, I want to export the H20 to China. And the President said, OK, I want 20%. And Jensen said, how about 15%? There are people talking about whether this is constitutional or not. But who's going to complain if it's Nvidia on the other side of the table happy to make the deal?
But Ed, in general, the relationship between the president and a lot of chief executives, again, Intel had a really hard time over the last 2 weeks with the Intel chief executive because of his closeness to China. They meet in the White House yesterday, and suddenly the president says, actually, he has an amazing story. He's going to talk to the cabinet.
Yes, things change quickly. Like last Thursday on Truth Social, the president said that Lip Bhutan should resign because of historic ties to China. Actually, Lip Bhutan has been well known to the American technology industry for 40 years. He was a venture capitalist that did put money into Chinese firms, and he was at a company called Cadence that was investigated because of the flow of technology to China in a military context at one point. But on paper, Intel is like everything the Trump administration is doing in technology right now. A national champion. It wants to manufacture domestically. It wants to move fast and build things. It's just that Intel hasn't really got the program. That was really significant news. And I'll be interested what the market does today, because this president says things and then he does them. That was evidence in the Gulf, for example, which I'm sure you covered. When Jensen Huang was in the Gulf, there was a time it would be unthinkable that we'd have an announcement of billions of dollars of chips going to Saudi and UAE directly. The president just made it happen. Can he make something happen for Intel domestically? His tune has changed, for sure, with Lip Bhutan.
Yeah, and it's unclear whether it's allyship or something, a deal was struck or something like that. Brendan, when you look at, one of my favorite stories actually was Bloomberg writing 5 months ago saying, this could be President Xi's world. Given all of the uncertainty with the U.S., people look to China to kind of be, if not a beacon of stability, a more reliable partner than the U.S., which at the time seemed crazy. But we know that President Lula has also been speaking with President Xi because of what Trump is doing. Are there more trade deals to be done with China?
Yeah, I think what we've seen over the past 24 hours, 48 hours, and even over the past couple of months is that President Trump is dealing with a very different China than he dealt with back in 2018 and 19 when in the lead up to the Phase 1 deal. This is China that has, as President Trump would say, some pretty good cards in its hand. And they're playing it in the view of a lot of analysts very well. So the conversation between Xi and Lula is interesting because Brazil is a big soybean exporter. And what did President Trump tweet about on Sunday? He said, wouldn't it be great if China buys some soybeans? Well, China can get all the soybeans it needs from South America. So I think you're seeing the soybean diplomacy come into this, but we're well beyond the sort of soybean diplomacy game. We're in really a tech war rather than a trade war.
Yeah, and Mohit, you're absolutely right. For the moment, equities are just ignoring the tariffs. But actually, given the weight of these stories and the importance they have for economies, at some point they'll come home to roost.
Well, let's talk of numbers in terms of importance to economies. Average tariffs end of 24 was around 2.5%. And let's say when the dust settles, we're talking of average tariffs of, let's say, 15, 17%. So that's additional $300 billion of revenues for the US per year. That's exactly the amount that's needed for the big, beautiful bill. So yes, we have tariffs, which are a tax on consumers, but then we are giving back to consumers in the form of a big, beautiful bill. So yes, we can talk of sector rotations, which consumers benefit, which consumers weaken, but US economy as a whole is fine. So tariffs, that's why my view was that yes, they have a lot of uncertainty impact, but from an equity market perspective, shouldn't have a big impact.
Mohit, the CPI print today is extremely important. If we see a pickup in inflation, does that hurt consumer? You could always rely on the U.S. consumer so far. At some point, does it weaken?
It does, absolutely. So it depends on how strong the CPI print is. And you used the word earlier, stagflation. I like to use the word slowflation rather than stagflation
because
for
stagflation
US.
People panic, but slowflation people are a bit cooler about it.
Yes, but also the reason I say slowflation is I do not see the US economy weakening massively. So again, to put some numbers, unemployment rate can go to 4.5%. Absolutely, that's a weakening of economy. Plotted on a 20-year chart, looks great. We've never had a recession with unemployment less than 6%. So yes, we can have a slowdown of economy and a sticky inflation, but I think the US economy is still doing fine.
Thanks to tech.
Thanks to tech. I totally agree.
If you strip out tech, is it a little bit more problematic if you strip out the big seven?
Absolutely agree with that. So that's why if I look at Big 7, if I look at S&P and I compare to Russell 2000, 30% of companies in Russell 2000 are not making money. I do not think they will be making money. So I still think it's a tech story, it's a big cap story, it's not a small cap story. Absolutely agree with that.
When you look at some of the other things, I mean, Elon Musk hasn't been in the news like he used to be, but he is today.
Hasn't he?
Accusing, well, not when he was like in charge of Doge, where it was basically like it was a face-off between Trump and Elon Musk and how many headlines they could get. Elon Musk accusing Apple now of unfairly or of unfairly favoring OpenAI on the iPhone. What more do we know?
Okay, so Musk has posted several times on X overnight. The core accusation and the claim that he's made is he will litigate in the antitrust context because he believes affirmatively, positively, Apple does some kind of action that keeps OpenAI at the top of the rankings lists on the App Store and suppresses his X and Grok apps. One thing I'd note is that that tirade on X came just an hour after the new version of Grok went on the App Store. Yeah. And at the core of his accusation is that Apple and OpenAI have a technology relationship. OpenAI's models somewhat underpin Siri and are interoperable in that sense. Apple's, I can tell you, the App Store is dictated by volume downloads, velocity of downloads, the number of downloads from the time an app is first listed, and metadata based on the developers and what they write into the app. I don't know whether Elon Musk knows that or not, but he has a history of being litigious in defense or offense of his own companies. Apple has not commented so far.
But it could also just, going after them so that people get angry at Apple. We never really know whether he really thinks there's like a lawsuit case there.
He has threatened legal action in the past and then not acted on it. He's threatened legal action in the past and acted on it. And then Sam Altman, who's the OpenAI CEO, has also weighed in on this on X, basically disagreeing with what Elon Musk says. But, we will not know unless Apple comments or somebody gives us some data. But it's very much, I've launched an app and the downloads aren't what I think they should be. And I'd like to know why. That seems to be Elon Musk's perspective.
When you look at, of course, the other big story this week will be a possible peace deal between Russia and Ukraine. That seems to be really not taken off the table, but Donald Trump saying, look, let's minimize expectations. I mean, at some point there was also tariffs, but that weren't imposed against anyone apart from India because they were buying Russian oil. Do we know any more of that, Brendan, as we head into the meeting?
No, I think that's one of the main questions is whether Trump's tariffs on the extra tariffs on India and Brazil will become whether those are kind of a one-off or whether they work in the short term, and whether geopolitics becomes part of the equation in the use of tariffs from the White House. So India is under a lot of strain right now. We've got some good reporting on the terminal recently about how the Indian exporters are really getting hit hard. So maybe the pressure comes to bear on Modi to offer some sort of concession that gets them out of those tariffs. But geopolitics are definitely part of the calculus now from the White House.
Yeah, and geopolitics actually for once this week also seem to be helping some of the equities on the back of like lower oil and the fact that they're hoping for a peace deal.
Yeah. So what we're looking at is particularly for Europe, because if we do get a peace deal, and I'm not a geopolitical expert, but any version of peace deal is really good for Europe. It's good for certain sectors like construction, materials, chemicals, even consumer sector, because that's a positive. Lower oil prices, lower agriculture prices help. It's very positive for Eastern Europe. And most of these sectors, when I think about consumers or industrials or materials, they are under-owned. They have underperformed. So any version of peace deal could really be positive for these sectors.
Okay, what a terrific briefing to get us started. Bloomberg's Brendan Murray and Ed Ludlow and Mohit Kumar, Chief European Economist at Jefferies. Now, coming up, trade ties between the world's two largest economies in focus as President Trump extends a pause of tariffs on Chinese goods. We'll be speaking with Yuji from Chatham House. This is Bloomberg. Well, returning to one of our top stories, and President Trump has signed an executive order extending the U.S. tariff truce with China for another 90 days. The extension will ease worries of a renewed tariff war that threatens to choke off trade between the world's two largest economies.
We've been dealing very nicely with China, as you probably have heard. They have tremendous tariffs that they're paying to the United States of America. The relationship is very good with President Xi and myself.
Well, joining us for more is Yu Ji, Senior Research Fellow on China in the Asia-Pacific program at Chatham House. Thank you so much for joining us. First of all, when you look at the truce deadline and the fact that it was extended to November 10th, is this a good sign? Like, what does Donald Trump want from China right now?
Well, Francine, nice to see you here. What Donald Trump wanted with China, obviously, they want to have a grand bargain with Beijing to be able to justify that Donald Trump has dealt with the trade issue quite successfully as what he promised during the presidential election, I think, firstly. Now, secondly, I think China as a market is really large enough for the United States and also for U.S. companies. So I doubt any U.S. companies would willing to give up. So I think that's the second reason. Now, I think third reason is also politically. Donald Trump wants to show that he is able to manage probably the most consequential bilateral relationship, which is U.S.-China relations. But all this hung into the moment that whether he's able to put up a meeting with Xi Jinping or not later in the year.
So, Xi, when you look at exactly what he needs, there was a little bit of a spanner in the works. Certainly yesterday when we heard that AMD and Nvidia could pay 15% back to Donald Trump. And we know that he's looking for money also to pay for the big, beautiful bill. I mean, is this more of a money arrangement? So will he be softer on China if he understands that he can get money back from U.S. companies?
Well, it's a kind of typical Donald Trump mentality. He's willing to make a deals and try to find some money somewhere to offset for something else. And that actually played perfectly for China's interest at the same time. That is to say, let's talk about money, but not national security. But while we're talking about the chips and semiconductors in here, essentially, it's about a security risk. But equally, I think really to what extent, how much China is really willing to buy the H20 Nvidia chips, that's another entire different question. I mean, earlier this month, the Chinese authority already get in touch with Nvidia talking about the possible vulnerabilities and backdoor security risks. So I think the Chinese also have their own problems with this deal by itself.
Where do you see the tariffs actually ending up?
Well, I think judging from the pattern that Beijing is doing right now, it seems Beijing taking a stalling negotiation approach. That is to say, delay the deadline as much as possible, which would be able to buy some time for China's own domestic economic rebalancing. And really judging from the trade number, the export number we have seen in July so far, that the Chinese export actually grows 7.2%. So in a way, that does not really necessarily fit into the story that without the United States, that China's export won't grow. So I think really what Beijing is looking at is firstly looking at the alternative market that is able to offset the losses from US and European market, but secondly, also rebalancing its economy.
Give me a sense of actually how China could retaliate. I don't know whether you consider, they basically said that especially for companies, well, not companies, but actually government officials, it's better if they don't use this H20 processors from Nvidia. Is that retaliation, or will they just be much stronger on rare earths? This is the stuff that, the West really needs.
Well, I think it's both ways. So judging from all the readouts so far, I think both sides has not really mentioned where does the critical mineral export control Beijing is willing to loosen or not. We haven't seen that. So I think it's very firm. That's to say, Beijing will continue to play a very hard-nosed approach regarding the export control over critical minerals. So that won't change. Now, secondly, I think Beijing is now drum up this drive of indigenous innovation, which is to say that hoping to be able to use domestic grown semiconductors that would enable and strengthen China's technology supply chain. So Nvidia or not, perhaps it's not really the best option for Beijing if it is want to build up a semiconductor supply chain within the country by itself.
Xi, what does it mean for example, soybeans? We know that Donald Trump on social media was really wanted China to quadruple U.S. soybean buying. But would they, if they have Brazil, who's also a partner? We know that President Lula went to see President Xi.
Yeah, I think the two men just had a conversation earlier. Let's put it this way. I think that China today is very different from the first Donald Trump terms, that in terms of negotiation. In the past, Beijing was more inclined to have quick trade deals with the United States. However, I think given at the stage where we are now, and China has a very different toolboxes to be able to use. So I think it's less likely that Beijing is willing to agree to purchasing extra soybeans, which Beijing can do so if they decided they want to make some kind of trade-off with the United States. But I think so far, Beijing's mood seems to be quite muted when it comes to the discussion of purchasing extra agricultural products. But obviously, that is perhaps the easiest bargain that Beijing is willing to make to offer.
Do you think we'll get a meeting between Donald Trump and President Xi, face to face?
Well, I think my watch point would be to see whether the Chinese foreign minister will be able to visit Washington, to visit the White House by late September during the UN General Assembly. So if that has been agreed, and that means there's a likely summit happen between Xi and Trump. So I think that's the watch point, would be late September.
Gee, I mean, I know it's something that we've also been trying to talk about with the panel. Is President Trump now softer on China than the rest of his cabinet?
Well, I don't think he's really soft on China. What he's really want to do is he wants to get the trade issues sorted, which he considers as his only single biggest priority, firstly. I think, secondly, there's also the sense that he wants to show himself as being a great leader that is able to communicate with one of the world's second largest economy and also be able to communicate with leaders from all sides. So that is something Donald Trump is looking at optics. That is like a statement, and he's willing to talk to everybody. So that is what he's aiming at. But I think this might change given the midterm election is taking place. We're probably going to see more turmoil on U.S.-China relations in the next year, but not necessarily this year, really judging from what is happening right now on the trade front, but also on this potential summit between Xi and Donald Trump.
Yuji, thanks so much for joining us. That was a senior research fellow on China at Chatham House. Coming up, we talk energy, given presidents, of course, Putin and Trump meet. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. As President Trump extends a trade truce with Beijing and sees an opening for chip sales, China urges local companies to avoid using Nvidia H20 processors. Meanwhile, the president downplays expectations for his upcoming meeting with Vladimir Putin, casting it as a feel-out meeting. Plus, the UK loses fewer jobs than expected in July, bringing some relief to the Labour government and the Chancellor, Rachel Reeves. Now, EU leaders and Ukrainian President Volodymyr Zelenskiy plan to hold a call with U.S. President Donald Trump tomorrow. This comes ahead of his meeting with Vladimir Putin this Friday in Alaska. Now, Trump has been talking down the chances of an agreement being reached when the two men meet.
This is really a feel-out meeting, a little bit. And President Putin invited me to get involved. He wants to get involved. I believe he wants to get it over with. Now, I've said that a few times. And I've been disappointed.
So we're now joined by Stephanie Baker, our senior writer. Stephanie, as always, thank you so much for joining us. Look, we were talking about it yesterday. It's unclear what they can achieve in this short of time. But for the president 2 days before saying, look, it's a feel-out meeting, I mean, what is it?
It's a very odd way to go into a major U.S.-Russia summit that we haven't had for 4 years. A feel-out meeting does indicate to me that people have gotten to him, European leaders, to warn him of the risk of doing this summit, and that I think ultimately, stepping back, I do think that Trump is worried that Russia-Ukraine will mar his legacy. I think he, as we all know, has been eager to get the Nobel Peace Prize. He thought this was going to be over in 24 hours, and it has dawned on him how difficult this is. And going into this meeting, trying to do land swaps, as we discussed yesterday, is going to be incredibly difficult for two leaders to discuss. And I suspect we will get a statement at the end saying they were going to leave it to working level groups to carry on. But I do think he's worried about, this marring his legacy, and that Ukraine either falling to the Russians would be bad, which he knows, or remaining at war is also going to be incredibly bad for his presidency and his legacy.
And there were questions, Stephanie, about whether President Trump would speak with EU leaders before or after. We know that there's a phone call tomorrow, so that feels also significant.
Very significant. I think they're really worried that he is going to go into this meeting and come out with some kind of deal that would legitimize Russian territorial gains on the ground. And I think they're trying to present a united front and protect Ukraine's sovereignty, because ultimately it's about European security as well. And I think that will be a very important meeting. And there are people on that call: Alexander Stubb of Finland, Keir Starmer, both leaders who've developed a rapport with Trump. I think they're going to try to convince him of the dangers that Putin will be playing for time, and that Putin lies in the context of these meetings, that he should be aware of that.
Stephanie, why Alaska? I know this is something that we've been asking ourselves. I mean, it's basically putting him on U.S. soil.
Yes. And this is an indicted war criminal under U.S. sanctions being welcomed on U.S. soil. So it is a victory for Putin, just the meeting in and of itself. And I think perhaps they decided that more neutral territory like Dubai or Turkey would present security challenges. I'm not sure, but that's a question that remains to be answered, and maybe we'll find out more.
Stephanie, I also want to ask you, because you're my go-to person for anything Washington and Trump. I mean, there's another show of strength from Donald Trump on deploying the National Guard to Washington. I'm not sure what this is. Is it testing the legality of certain things, or does he really think that crime is too high and he wants to get a hold of it?
I think it's both. You have to question the timing of it. Is he trying to deflect attention from the summit, which he knows may not produce a real agreement, from the Epstein files? It comes amid his increased militarization of U.S. cities. I mean, remember, he sent in the National Guard to L.A. Against Governor Newsom's wishes, and that's being fought out in the court. Now, he's got the legal authority to do this in D.C. because he, as president, he's allowed to order the National Guard into D.C., but crime is at a 30-year low. It's not that there isn't a crime problem in D.C. I've spent a lot of time in D.C. over the past year. There is a homelessness problem, and I think he just wants to position himself as the law and order president.
So interesting, Stephanie. Thank you, as always. Stephanie Baker, they're our senior writer, and a reminder, you can also read more on all of these topics, especially ahead of the summit, in Stephanie's book, Punishing Putin. Now, all traders keeping an eye on two moving stories this week. First, a decision by President Trump to pause tariffs on Chinese goods for another 90 days. And, of course, that key Trump-Putin summit on Friday. Now, we're joined by Aldo, Spanjer, head of energy strategy at BNP Paribas Markets 360. Aldo, thank you for joining us. I mean, there is quite a lot going on when you look at, the market, the oil market was seeing it as a positive, the fact that there could be actually a peace agreement in Europe, even as soon as, maybe not this week, but certainly soon. I mean, talk to us about the market dynamics.
Yeah, look, I think it's, if you look at oil specifically, and let's say we have some kind of peace deal between Russia and Ukraine, I think for oil it probably has limited impact physically, in the sense that we've rerouted oil volumes from Russia, but we haven't really cut them. And I think the only way you would see a material impact in oil physically is if Europe takes Russian oil again. And I think that's still a fair way off. I think the upside maybe sits a little bit more into gas markets, where you probably have more of an argument to make. Maybe we see Russian supplies coming back into Europe. I'm not one of the people who think that might happen. But in terms of sentiment, I think you could see, particularly in gas, probably a relatively bearish sentiment coming into the market on a higher than zero probability of gas supplies coming back.
But Aldo, first of all, give me a sense, the price of oil has held up a little bit more than we were expecting, given also what OPEC Plus has done. Why?
Yeah, look, it's quite a few factors. So you're right. So I think H1 stronger than everybody expected, given a pretty bearish macro overlay, OPEC bringing supplies back. I think a few factors are that Chinese stock builds have been really strong, particularly in the first half of the year. They haven't impacted oil prices because oil prices are set in the Atlantic Basin, not in Asia. We've also seen that the OPEC supply increase, which started in Q2, happens to coincide with summer in the Middle East, and that means very high internal demand. So I haven't seen many supplies to market. Non-OPEC supplies, which is the big overhanging issue in the market, is starting to ramp up, but hasn't really ramped up in Q2. That's a Q3, Q4 story. And we've seen very, very, very strong middle distillate cracks, which basically means that every refinery who can make diesel would probably want to run it. Stocks are low and they can do it. Add it all up, it's all bullish. And the question in the market now is, some of these drivers are going to probably turn. Question is when.
So when do you think they turn?
I think give it a month. I think basically right now, I think we're going to start seeing builds in the Atlantic Basin. You need to see stocks come up because stocks are really low. And as long as stocks are low, oil doesn't come up. I think we're starting to see builds. I think we're running into maintenance season in the Atlantic Basin. That's September, October. You will take out a lot of demand just seasonally. And I'm seeing Brazil increase. I'm seeing Gulf of Mexico increase. I'm seeing Guyana increase. I'm giving it another 4 to 5 weeks. So end of September into October, I think you really will start seeing the system lengthen significantly. And that's what we need for oil to come off.
Okay, so Aldo, what does it mean actually for OPEC Plus? At that point, I mean, will they have difficult decisions to make?
Yeah, the question is always, what's their, if there is one, so what's kind of their internal price mechanism? We started with 90 2 years ago.
Do they have a range?
I'm not. Yeah, they probably have a lower range. I suspect if oil starts to significantly fall below 60, so if we get a 5 handle, I think it's an issue. Then maybe we talk about taking supplies out again. But we've seen how difficult it is within OPEC to get agreement to cut further. So I don't think they'll respond very quickly. I think they understand that the market is lengthening. I think they stopped the increase that they've now announced for September. I think they can't bring more of the voluntary cuts back. I think they take a pause, see how good or how bad it will be in like Q4, Q1, and then reassess in April like they did this year. And maybe they want to unwind or take action.
What's China doing? I mean, in terms of, we know that India is buying Russian barrels.
Yes.
How much is China doing the same?
Yeah, less than India. So China's buying at least seaborne, I think 900. So about half, a little bit more than half what India buys. Look, what's interesting in China is that as I said, one of the big surprises was their basically stock building. So it's not like demand has massively increased in China and they need more crude. Right. They really want to build both the commercial and strategic stocks, basically to insulate themselves, I suppose, against further supply issues down the line. That number has been really high. And the interesting thing is, there is still capacity to increase further. So one of the questions in the market as well is, okay, can we just see this stock building in China as something that's going to continue at least over the next couple of quarters? If that happens, and I think there's room for it, it kind of puts a bottom in your market.
We know that President Trump wants drill, baby, drill. What's shale gas looking like in the U.S.? Or what's shale oil actually in the U.S. looking like?
I mean, rigs are coming down. So, yeah, it's always been, so the issue, and we know, the issue between low prices and drill, baby, drill, I mean, those two are kind of difficult. They're mutually exclusive. I think if you look at, let's say we're in a high 60s Brent, so you're in a mid 60s TI, it's borderline. I think it's hard to see growth at those kind of levels. And I think that's exactly what we're seeing. So at these levels, it's hard to grow because your curve doesn't really give you a lot of support to make significant amounts of money on your oil. What we did see was, and that was actually interesting, during the Middle Eastern spike, you saw a lot of producers in the US shale pad at least hedge part of their production because they were quite underhedged. So they are limitedly price sensitive. But you can see it. Rigs are coming off. I'm seeing a lot of producers saying, this doesn't quite work for us. So I think you need to see a little bit more upside in crude before you really can become very positive on shale. We're seeing deep water come on, Shenandoah is coming on. But it's really about shale, and it's quite price sensitive, and I think we're borderline.
Okay, Aldo, thanks so much for joining us. Aldo Spanjer, they're head of energy strategy at BNP Paribas Markets 360. Now, Norway's $1.9 trillion sovereign wealth fund has divested from 11 Israeli companies, and it's terminating all contracts with external managers in Israel. The decision follows public outcry over investments linked to the war in Gaza. The fund held stock in some 61 Israeli companies as of the end of June. A reminder, we'll be speaking to Nicolai Tangen, the chief executive of Norges Bank Investment Management. That's just after 10 a.m. UK time. Coming up, the UK loses fewer jobs than expected. We'll discuss what it means for Rachel Reeves and what it means for the Bank of England. That's next, and this is Bloomberg. Now, markets readying for the release of US CPI a little bit later today. It's seen really as a key data point before the Fed's meeting next month. Let's bring in Christine Aquino, managing editor for our Markets Live team. There's a lot going on, Christine. First of all, great to have you in London. But what are you looking at in terms of drivers for a potentially hot print?
Well, Francine, I'm keeping my eye on the core services part of the inflation print today. It's, of course, July. And so we're looking at potentially a hotter print because of seasonal trends, right? It's travel season. A lot of people are buying more things for their vacations. And so there is a potential for a bit more of an increase in prices of hotels and cars and services like that. And so that's potentially something that we could be looking at driving that number higher. But then also maybe something that Fed officials might be happy to ignore given the seasonality of it all.
So how could this print actually influence Fed cuts in September?
Yeah, well, I mean, it definitely frames that debate very nicely, Francine, because as we know, markets, of course, are gearing more towards 2 rate cuts by the end of this year. But we have seen an increasingly vocal number of Fed officials calling for more than that, right? 3 rate cuts potentially from Fed's Bowman and Waller are some of the most vocal proponents of that idea. And so there is this divide between what markets are expecting, what some Fed officials are calling for, and I guess what the majority of the Fed board is looking at the moment, which is maybe leaning more towards a restrained pace rather than more rate cuts. And so really, I think what this print would do would either resolve some of that debate or maybe widen those divisions further, depending on how hot or not it goes.
Yeah, Christine, it's also interesting because we have a truce, right, between the U.S. and China. So that deadline got pushed back by November 10th. And I wonder how much that is also to do with possible inflation creeping up and therefore a wider impact on markets.
Yeah, absolutely, Francine. I think some of the euphoria that we're seeing in terms of the knee-jerk reaction in stocks definitely thinking, oh, maybe that inflationary impact from tariffs might be delayed if U.S. and China somehow manage to strike some sort of deal when it comes to trade between them. But then, of course, still people thinking about there is potentially still some inflationary impact coming through, given that I don't expect the tariff levels to be any lower than they currently are, right? It's just a question of, are they going to be as high as some are fearing? And so that's really the question here. And so, yeah, I think there is still some fear of that inflationary pass-through. And that's where the Fed debate really becomes important, is because that's the counterweight to that, right? If we are going to see more rate cuts than expected, then that could be something that offsets that. But stocks are definitely hoping that we get more Fed support, but then there's always that threat of tariffs lingering just around the corner.
Christine, thank you so much. As ever, Christine Aquino, their managing editor for our Markets Live team. Now, President Trump has named E.J. Antoni to lead the Bureau of Labor Statistics after firing the previous chief following weak payrolls data in July. Now, Antoni is chief economist of the Conservative Heritage Foundation and has been vocal about his concerns with official jobs data and revisions. The position is subject to Senate confirmation. The Trump administration is also said to have expanded its list of potential new Fed chairs. Officials have told Bloomberg that the central bank's 2 vice chairs, Mickey Bowman and Philip Jefferson, are now under consideration, along with the Dallas Fed president, Lori Logan. It's understood that the Treasury Secretary, Scott Bessent, will interview additional candidates in the coming weeks and then shortlist individuals he recommends to meet with President Trump. Onto the UK, and Britain's jobs markets appears to be past the worst, with a smaller than expected drop in payrolls last month. The data further clouds the Bank of England's decision over whether to carry on cutting interest rates. Now, we're joined by Dan Hansen, chief UK economist for Bloomberg Economics, and John Stepek, our senior reporter and writer of the Money distilled newsletter. I'm a big fan of what Dan does, and actually all of your projections, which I care to add the BOE always says are righter than most, and I'm also a big fan of your newsletter. So no pressure, Dan.
No.
I mean, look, if you look at the jobs data, it was better, but actually complicates a lot of things for the Bank of England, because again, they have, they look at growth and jobs, and they talked about weaker jobs, but then they have the inflation, so it's unclear what they do next.
Yeah, it is. And I think what was interesting about the August decision is that there was this definite shift in the focus away from jobs and towards inflation and elevated inflation. And over the course of May and June, the bank had been very worried about the jobs market. And what we've had is quite a lot of revisions to show that the scale of the loosening in the jobs market hasn't been so significant. And obviously the data this morning adds to that. The only thing I'd counter it with is wage growth. And actually one of the interesting things that Andrew Bailey said at the press conference was that wage growth was the biggest bit of information, or the biggest bit of news, that they had in the run-up to the August decision, because it had undershot their forecast. It is continuing to undershoot their forecast. So I think if you take the data in the round today, it doesn't, as you sort of said at the beginning there, it doesn't solve any of this mystery. We're still in the same place. But I think whatever your prior was before the data dropped this morning, it probably hasn't changed dramatically. Yeah. We've also got a lot of data to come. No one's thinking they're going to cut in September, but November's the one that people are looking at, and possibly, if it's not November, December. I think views probably won't have changed dramatically, but you're right, there is this story now potentially emerging that the jobs market is bottoming out, and that will change their calculus.
I mean, views are also, they had to vote twice. You don't really know what the MPC is thinking at this point. Is that fair or harsh?
I don't think it's harsh. One thing I would observe over the past, if you go back even over the past, 2-3 years, the thing about the Bank of England compared to, say, the Fed or the ECB, they're happy to surprise. They're happy to surprise markets, and they've done that. They did that in November 2021. They did it in June, memory serves me correctly, 2023. They went for a 50 basis point hike. Everyone thought 25. They paused in September 2023 when everyone thought they were going to hike. They're happy to surprise. So the one to watch over the next 2 to 3 months will be Andrew Bailey, because he is the median voter now. If he switches, you get a 5-4 the other way. So what he says will be the most important element of the communication over the next 3 months or so.
John, and we've all listened to so many, actually, of the Andrew Bailey press conferences, and there's always slightly, he's always been very careful in saying it, but a lot of the uncertainty that he's dealing with is, I guess, domestically made. It's some of the labour policies put in place from that first budget by the Chancellor. Are we over the worst? There were two things that were announced. They came in effect in April. With the jobs numbers getting better, or does it mean that things normalise?
Well, it's tricky because the problem is we've got another very uncertain budget coming up. In a funny kind of way, we've got a repeat of last year. So last year, obviously, the government was elected. They came in, people were feeling upbeat until the next day when they said, oh my goodness, things are terrible. We've got a £22 billion black hole. We need to fix it. That set up a period of sort of mild panic before the actual budget. And then the actual budget ended up kind of being a bit of a punch in the face for business when they put up employer national insurance contributions. So drove up the price of employing people quite drastically. Now, that was meant to fix everything, and of course it hasn't, because they've had to unwind a load of their welfare kind of reforms. And so we're looking at a sort of equally big black hole coming into this budget. And all the employers know and all the employees know is that something bad's probably going to happen. So you've got that tension there. So, the thing that's miraculous to me, if I'm honest, is that the labour market data is as strong as it is.
Why do you think that is?
I think it's probably because there's actually there's more spending power in the economy. The one thing I think we do forget is that for all the doom and gloom and misery about the public sector debt level, private sector balance sheets are broadly in decent shape. They're in much better shape than they were, obviously, in 2008. Households have deleveraged, kind of businesses are doing okay. So I think there probably is capacity for absorbing the shocks that they've had. But I think we're kind of there now. And ideally, maybe the Chancellor would try and drop some hints as to how bad it's going to be, but equally, I don't think she's in a position where she feels able to do that. We haven't had a budget date set yet. which means it's going to be quite late in the year. And so, maybe she's just got her fingers crossed, hoping that something will turn up.
Something good, which is, I don't know where...
Well, ideally something good.
Where anything good would come from. What are you expecting for in the budget?
I mean, I think John's absolutely right there, that the risk over the next sort of, whenever the budget is, between now and that point, we get a rinse repeat of last year where people worry about what's coming, and that this sort of relatively less worse than expected jobs data we got today, things start going back the other way. I mean, my opinion on the budget is that there'll be a black hole of somewhere between 20 to 30 billion pounds that she'll need to fill. Now, the big reason for that is to do with the OBR's forecasts and the fact that they've been very optimistic about the medium-term economic outlook. Chances are they will revise that down, particularly in around productivity growth, which again is this one reason why the jobs market might have held up, is that firms need to employ more people just to service a very a small amount of demand, because productivity growth is so weak in the UK. That's another reason why you might argue that jobs market has been more resilient than expected. So she'll have to fill this gap. Where she gets the money from, I think, if it seems very unlikely to me, it go on business again.
Yeah.
So I think you're looking on individuals, possibly the wealthy, but also with that amount of money that's needed, it's very hard not to pull an income tax, a VAT lever, because they just raise so much more money than these other taxes that have very mobile tax bases, but also don't raise that big amount of money.
We need to talk Oasis, because when do we get to talk Oasis and inflation and GDP? But also we need to talk about house prices. First of all, Oasis. I mean, Oasis is basically like Taylor Swift. I mean, they're giving a boost to this country.
Yes. So the Oasis concerts could boost CPI. I was reading this morning the story by Tom Rees that other economists have estimated it might be, I think, 3 to 4 basis points. So just to put that in context, instead of it being an inflation reading of 3.6, it would be an inflation reading of 3.64.
Yeah.
Now, in the context of all the uncertainty we've got about inflation and the difficulty forecasting it, that's quite a small amount. Nonetheless, it will make for an interesting story when the data drops.
John's going to start a rendition of Wonderwall. In 20 seconds, house prices, up or down?
It's kind of flat, falling in real terms after inflation. Okay. Frustrating for everyone.
We have to bring the UK show back. We don't have enough time to talk about the UK. Dan Hansen, Chief UK Economist for Bloomberg Economics, and John Stepek, our senior reporter. A reminder to sign up to John's daily newsletter, Money Distilled. You won't regret it. It's a fun read. It's a great read. Up next, Bloomberg Brief. I know they'll spend a lot of time talking about CPI, also UK jobs, and of course, everything to do with tech. This is Bloomberg.